Let's take a look at some information and charts on Sushiswap for Brave New Coin. So Sushi is a DEX that uses typical AMM protocol with 50-50 lending, yield, staking, governance, the whole banana. Unlike Uni rather, Sushi has probably more apps, dApps, bells, whistles, gizmos, whatever, right? They're building things, they're doing stuff. Until I see stats for any of this, to me it's just an empty cathedral. Until people are actually using this stuff, it's great that it's there, but it's not necessarily going to like moon Sushiswap, right? Like the sushi community is going to say, this is great, this is awesome, this is better than Uni. We're multi-chain, which is probably their biggest boon, is being multi-chain. I think that puts them in a better spot than Uni. I doubt highly that Uni ever goes multi-chain, but maybe I'm wrong there. So they are multi-chain. They do have AMMs multi-chain. They have staking, governance, like I said. They have all sorts of stuff that I'm not even going to cover. Tokenomics is different than Uni. There is sort of a built-in staking yield component on these AMM pairs that's different than Uni. There's X Sushi. There's tons and tons of stuff going on that I can't possibly cover in a 10 to 15 minute video. But if you're interested, obviously take a look. Take a look at X Sushi. I'm currently myself providing some liquidity here. I just full disclosure, right? It doesn't affect my analysis at all, but through Badger or something. Like, I don't even know. I think that's most people. Most people don't even know the difference between Sushi or Uni. They're just looking at APYs. They're just looking at, can I get more money through Curve? I don't think we're quite there yet where we're so nuanced that we can understand, just we being general people, that this is better than that, or Sushi tokenomics are way better than Uni, stuff like that. So anyway, TVL has plateaued certainly since May, down since May, along with everything else. Volumes down since May 18th, a big liquidation spike. Volume's kind of down considerably, so hopefully, ideally we don't shear too many of the sheep at once, if you know what I mean, as far as retail is concerned, when they're on leverage, right? That's always the issue. Everyone gets excited, euphoric, bets a little too much on the wrong horse, and then loses all their money on a situation like May 18th. So volume's way down now. That's definitely going to leave a bad taste in retail traders' mouths. Those people who are probably less informed about coins in general, the people aping into Shiba Inu and all that other junk, right? And that's probably partially why volumes are down just across the board. But specifically on DEXs, and I'm going to say this on every video about TVL, and I'll say it again on this one, but as we go multi-chain, as we go multi-version, it's going to get harder and harder to know exactly how much TVL is where unless you yourself manually calculate it. Or we have some magical website. DeFi Llama is one, DeBank is one, DeFi Pulse is another. This is the Uniswap data. But my point is you have to know what you're looking at in order to truly understand, first of all, the value of TVL, right? Because it might look on one of these websites that Sushi is way down the list when in actuality, across multiple chains, multiple versions, it's way higher, right? So DeFi Pulse has it at 3.2 billion. And the other conversation is, what is TVL? What does it even matter? What does it mean? Why should we care? Can we see value on token price for the underlying exchanges in TVL? To me, it just points to incentives, right? Like if the incentives are better than 1inch or Uni or wherever else, then you're going to see more TVL here. So TVL, according to DeFi Pulse for Sushi, is around 3.3. Something else to mention, if there's more stablecoins on the exchange, right? Curve's TVL is going to be more stable because most of that is stablecoins. There isn't a volatility risk there, so in times like now, probably when we're at sort of like a mini bear market, Curve's TVL is probably banging because they weren't hit with a crazy volatility spike where they saw their TVL drop 20, 30, 40, 50% just because the underlying assets in the calculation took a hit, right? So it's important to understand that as well. So is it multi-chain? What is the version? What is the underlying TVL comprised of? All that stuff's super important. And the bank has them at 3.4 billion. I like the bank a lot as far as stats because it tells me more than just TVL. At the end of the day, I'm not a huge fan of the metric anyway, but again, it tells me volumes, transactions, like all of these are down, right? Users kind of flat, not too bearish there, but to see the volumes go to basically zero relative to where it was, right? Like that's a big issue for the exchange relative to everything else that's going on, right? In a vacuum, you can't look at this and say, okay, we're bullish on Sushi, the token, because the volume on the exchange is down 90% or something from the all-time high, down 50 plus percent, 90%, whatever it is, right? Like this looks bad. Certainly. If you're a DEX, show me the volumes, relative to everything else. Show me the volumes relative to centralized exchanges. Even on here in the last 24 hours, Sushi is losing to 1 inch as far as volumes are concerned. And obviously Uni has a big slice of this pie most of the time, usually greater than 50%. So if you're Sushi, you don't want to fall to the bottom of the pile, right? Because otherwise you're just building an empty cathedral where nobody cares. Best case for Sushi, honestly, is something catastrophic happens to Uni, right? Because Sushi can just be right there and pick up the slack. As far as total volumes per month are concerned, again, Uni obviously is the leader. Sushi in the forest green, teal, I don't know. I'm a bit colorblind, I guess. Whatever this is, aquamarine, I don't know. You can see volumes obviously down significantly across the board, but their monthly volume had been second to Uni in the month of May. Now, I doubt across the board volumes are going to spike higher. That felt like very much to me like a washout type volume in May with all those liquidations, with all the volatility spike, right? 70% negative on everything basically. So again, that needs to be factored into token price realistically on the fundamental side of things. If volume isn't expected to get higher anytime soon on a daily, monthly, weekly, yearly basis, right? Then at the very least, I don't expect the token itself to just continue to moon higher. We can also look at TVL versus annualized revenue as a ratio. And some of this is supply side, so based on volume. Some of this is protocol based on the fees built into the protocol itself. And Sushi sits at the low end of this ratio, even relative to Uni and everything else. It also sits at the low end of the equivalent PE ratio, arguably, relative to everything else. So it's definitely a bit divergent from what we're seeing. If I'm bullish DEXs, I want volumes to be increasing. I want transactions increasing. I want users increasing. I want the DEX to go multi-chain. I want more and more services. I want governance, staking, lending, right? I want everything the DEX can possibly do and do well to be bullish on a token. So we're not checking all those boxes here for anything really, but specifically Sushi. It may look better and may be positioned better relative to Uni, especially when we talk about fully diluted value. But at the end of the day, we need people to actually use the exchange, to be bullish on the token. That's my opinion anyway. We can also look at the on-chain metrics for the token itself. So this was the initial token distribution in September 2020. And since then, overall transactions have been flat. They certainly look better than Uni transactions do, probably because there's more to do with Sushi on chain relative to Uni. So I can't get too bearish on this relative to Uni. People are using Sushi clearly for something and in a sustained way since January. Maybe this is just the staking rewards or equivalent for Sushi, X Sushi, AMM Sushi, whatever it is. But at least it looks more bullish. Average transaction value is kind of waxing and waning with price, and nothing too specific to discuss there. Here's active addresses. Again, you can see token release back there, and active addresses have kind of held those highs. I mean, relatively to everything else, it's not anything magical, right? There isn't some secret paradigm here on Sushi. Active addresses are basically at 2,000 or less per day. Probably a lot to do with AMM, staking, whatever. But they still are holding those values. So anyone who's staking or using Sushi looks to be part of a growing community of maybe Sushi maximalists, right? Like they aren't leaving Sushi for something else. They're onboarding and sort of staying there, at least based on what the active addresses potentially look like. NVT, though, is at an historic high and declining. So it says, much like the PE ratio or TVL to market cap or whatever ratio you want to look at, Sushi is positioned well based on on-chain analytics relative to market cap, probably because a lot of their on-chain metrics are colored with staking components. But ultimately, volume drops significantly if Sushi's volume is less than an aggregator's volume. Either this aggregator, in this case 1inch, is doing something phenomenally well, or Sushi's just in dire straits volume wise, right? I don't know. Maybe there's some weird announcement or multi-chain thing. I know 1inch had some announcement with some chain I'd never heard of recently, but maybe that's enough to move the needle today. But it's important to watch this over time, because if you are a DEX, you don't want to fall down that list, certainly. Here's Google Trends for Sushiswap. You can see prior to 2020 it was 0, so this for the most part should pick up anything relative to the current exchange. And Google Trends had been pushing all-time highs throughout January 2021, February, May. Right now it's down slightly. Again, not as much as Uni. So metrics actually look better here than Uni does relative to technicals, because the Sushi technicals look terrible relative to Uni, and the Uni technicals look okay. They're not great, but you have to compare these two together because Sushi is a fork of Uni, at least initially. It's going to be more and more different over time. But in the back of everybody's mind, they're thinking, okay, what is Sushi's TVL versus Uni? What is Sushi doing relative to Uni, right? That's just a permanent comparison that's going to happen organically. Here's the USD Sushi chart on the 12-hour. Flipping to technicals here. So it's below the cloud, below the 200-day. Yeah, well, I don't really have enough data to look at the 200-day moving average, but below the cloud on the 12-hour, below the cloud or below the 200 period moving average on the 12-hour. Doesn't even have a bull div yet on this low. So to me, this just looks like it wants to go lower. There's no semblance of declining bearish momentum here. And most of the historic volume is below $3. Currently we're at 9. Monthly pivot is at 450, right? So it's hard for me to want to buy up here when so many people are in profit significantly relative to where they bought in based on volume. And for all of DeFi, I've said this for a little while now, but I like anything back to the January breakout. So in this case, 270, right? I'll be a buyer at 270. When I want to see some capitulation spike way down there, because this is just painting this downtrend, right? Like, it doesn't look bullish. I can't say the trend is bullish. Why would I be buying this? Unless you want to buy weakness and become a community member, which is fine. But as long as you're aware that this is probably going significantly lower based on trend, then it's just a difficult buy up here. This is a pitchfork. Pick 3 points to get a rate of change. It's going to want to live near this midline, median line, and it'll bounce up and down, but ultimately, until this breaks above the pitchfork for several 4-hour candles, it's going to want to live within this confines of this down pitchfork. And this may bleed for months, right? It may take 6 months, 12 months, 18 months before we hit 270. There may be periods of mean reversion, right? Like, this could pull back to 11, 15, but ultimately until it's above 15.5 for several days, I can't be bullish on this. It just doesn't look good, right? Like, I want to be bullish on DEXs and tokens and whatever, but it doesn't look bullish. Here's the daily for Sushi BTC. No bull div yet, below the 200-day moving average, below the cloud. It had several bullish continuation or reversal patterns that it had been painting that just sort of pooped out. Like, we had this bearish TK cross here, and ever since then it kind of just didn't want to go. It attempted a breakout here, and the cloud was telling you, okay, it's time to go long again, but then the entire market pulled back, right? And then you had this Adam and Eve here, didn't go anywhere. It just sort of drooped lower. Now it's nearing multi-month lows. The January breakout is all the way down at 10,000 sats basically. And that's a good level for me for full retracement to the yearly open, and still no bull div here on this low. There is a bull div on Sushi ETH, which is what this is. It is below the cloud, below the 200-day moving average. It doesn't look great. It is back to its yearly open though. Its yearly open was very near the current price with a bullish divergence. So maybe Sushi can muster some bullishness against ETH, but against USD, it looks very bearish. Looks ready for an eventual 50+% bleed. And I can't get bullish on it until it's above 15.5 in the near term. Lastly, I'll just mention the ETH-BTC fund I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool that is completely transparent and is kind of like copy trading where you can send ETH or USDC to these vehicles, this one or the DeFi portfolio. The ETH-BTC fund is comprised of wrapped ETH, wrapped BTC, USDC, and Aave USDC, so I can lend through Aave. I also have the ability to use inverse BTC inverted ETH, so that would be effectively shorting BTC or shorting ETH. I had planned on doing that, but SNXs have been having some issues recently, so I've been less warm to that idea in the near term as this stuff turns around anyway. But you can see everything I'm doing here, trades, you can see what I'm sending and where and when, and you can see all the deposits, the withdrawals. You can see that it's not a Roach Motel. That's important to me as somebody who's looking at these smart contracts. The DeFi portfolio contains, or did contain, 15 to 20 blue chip DeFi coins that I had to just let go because I can't just watch this thing bleed, to zero. It's down 40+% from break even. We started this in April, so we started it in a month prior to the massive meltdown, which isn't going to help this. If you're holding anything, it's a DeFi portfolio, right? You're going to want to hold DeFi, but if you're holding anything on the long side through May, you're getting extremely bulldozed with sort of negative price action. So anyway, I do have the ability to lend this stuff through Aave, again, dependent on gas prices and APYs. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.